Hey folks, it's Vic Noble here with your weekly trade example for the week ending July the 22nd, 2011. What I want to talk to you about this week is how it came to be that Shirley has been able to pull down, 8,400 pips in about a year and a half. And actually, it would have been a heck of a lot more than that, except that she was off for about a month, actually a little more than that. Now, look, I know we send out these flashy subject lines with all these big stats but what does it all really mean? Well, it doesn't mean that you're going to get those results, okay? No two people get the same results. It doesn't happen. The idea behind this and why I put that subject line like that, and this is what I really would like you to take away from this, is that the only way that these kind of results can be achieved is through consistency in your approach. Focusing your attention on a very specific way of trading each and every day. You will not get great results from randomly jumping around from one great idea to the next. It's just not going to happen. And the consistency I'm talking about is consistency at a whole bunch of different levels. You got to have consistency in the methodology that you use. You just do the same thing over and over. Consistency in the setups that you take. Consistency in your risk management. Consistency in how you handle the trades, like where your stops are, when do you move them, where do you take your profits, how do you set your charts up, and on and on. I think you get the idea. It's called having a game plan, okay? And I'll tell you, without it, you're going to be way behind the power curve, okay? All of the good, profitable traders that I've worked with are never uncertain about what they're going to be looking for each and every day. It's ingrained into their brain. Okay, and another thing is that they think differently than most people in terms of being right or wrong. They make sure to do the right thing when they're wrong rather than doing the wrong thing when they're wrong. See, if a trade's not doing what they expected, they don't mind getting out of it. They don't sit there with their eyes bugged out, wishing and hoping for a turnaround, right? They take action when they're wrong. And that's the way that it needs to become for you too. Yes, it takes time, and you have to be prepared to put that time in order to get the positive results that you want. Is it worth the effort? Well, that's something that I think only you can answer. But the thing is this: you don't need to reinvent the wheel. Model after successful traders. That's why I put these weekly trade examples out. You can see what they do, copy it. Okay. What I can tell you is that everyone I've worked with who's become successful has become an expert in reading support and resistance levels and trading around those levels and being well prepared for them ahead of time, in advance. Okay, that's the common thread among all of them. So I thought maybe we just finish off this video by going over some really good basic support resistance reading, because no matter how you want to trade, you could be a scalper, you could be a long-term trader, swing trader, whatever you want to do. Knowing about key levels can make a huge difference in your trading. So let's take a look at, we'll look at this one here. It's right in front of us in the euro. And when you do this, do this on a weekend. Take some time, go over them carefully. Make sure to start off with the higher time frames and work your way down. And you don't need to go below a 4-hour chart. We want to pick the major levels. Okay, so let's go to the weekly chart, which is in behind here. Let's bring that out. And I've got these levels marked off because these are levels that have shown to be important in the past for whatever reason. So I keep an eye on them. I'm interested in these. You can draw these from the wicks. I usually draw them from the bodies. It doesn't really matter. I'm interested when price gets down here. What's it going to do? These rejections here show that it might go back up. These kinds of candles are negative. That's just basic candle reading. We won't go into that right now. And once you've identified these things, you want to, like the market flow is down here right now, so it gets me a little bit negative on this. I don't know if you want to read the MACD on these. I don't generally tend to. I just like the pure price action. I just fundamentally, I think there's still concerns in the Eurozone, so I'm sort of thinking that way, but the price is right. I mean, that's all that really matters is the price. If we go down to the daily chart now, we can see that this had been going down. The market flow was down. It rallied and came back. These levels, if you look at them that I've got marked off here, have all had some significance at some point, and they're important to watch. This was a lot of resistance in here, then it was support, and it was support a little bit here, then it went down. So I'm watching it. Doesn't mean I'm going to trade at it. It means I'm interested what happens when it gets there. This drop here came down to an old really good support and resistance level right here, but it went right through it. So that doesn't mean you necessarily trade it. You have to know what kind of a trade you're looking for. That's part of your plan. but it went down to the next level down here, this next support resistance level, and bounced up. That's a bullish candle into what I saw as resistance because of this gap. This was actually a little trade I just happened to take in here. And I'm not here to just tell you about my trades, but just to give you a little sense of what to look for here. I like this little level, I like this rejection here, and the weekly market flow was down, and this is a very negative candle, so I sold it, and I covered part of it right here because this used to be support, and I got stopped out on the rest for break even. See? So then it rallied up. Actually, no, sorry, Matt, I did better on that. It doesn't matter. Doesn't matter how it worked out for me. I want you to show you the process of what I did here. It rallies up, and it hits this level. Now, here's another level that I was interested in today. And in fact, before we just go down to the 4 hour, I wanted to show you. Look how it was a 79% retracement, exactly right to there. So that just gets my attention. Now what I want to know, what kind of reaction are we going to have up there? So bear in mind that the market flow has gone back up on this chart. However, we're holding this downtrend here. You see this downtrend line? We're holding that so far. The weekly market flow is down. If I go down to the 4 hour chart, this candle action, here's that level we were looking at. See, it used to be resistance, and there was a bit of support in here, and now it's come up and retested it again. This first level that it tested, it just kept going up and up. The candles don't tell us anything until here. Look at this rejection, how the wicks just kept, price would fly up and then come all the way back down, and fly up and come all the way back down. I wish I would have sold it up in this area, but at that time of the day I'm sleeping, so it's not in my time zone where I live. I'm just not available for that. But I did get into it in the early morning down up in this level, up in here, and I'm still in the trade right now. I'm looking for the price to go down to here. On these I just happen to look for at least 2 to 1 on them, but everything's working off the higher time frames. I can tell you now, we're talking about Shirley earlier. She took a little scalp long on this, and then another one short on this on a lower time frame because of support resistance levels. But she's watching these higher level S&R levels. You see what I mean? Doesn't matter what kind of a trader you are, they're all important to you. Now I might get stopped out of this. I don't care. I'm not here to be right about my trades all the time. I've got to be right about managing them. That's all. Okay? So let me just recap it. What I want you to take away from today's video is not so much that, Shirley made 8,400 pips or that somebody else made X amount of pips or whatever it is. It's that successful traders have become experts in the process involved in trading. Okay, they've learned to think for themselves, independent of what everybody else on the planet is saying. They know that trading isn't, like I say, it's not about being right. In fact, if you think you need to be right all the time, you're not going to make it trading. You're going to have this isn't for you. But so I hope that message resonates with you and you can get something out of it. Again, model of successful traders. That's the easy way to go. Okay, you guys have a great weekend. Thanks for hanging with me here a bit, and a great week ahead. And I'll be back at the end of next week with another weekly trade example. If you want me to talk about something in these things, by the way, just send me an email and I'll get onto it. Alrighty, thanks so much.